This is Fintech Takes, the podcast keeping you in the loop on all the latest fintech trends, news, and ideas. I'm Alex Johnson, creator of the Fintech Takes newsletter, your host and self-confessed fintech nerd. Let's go! Hello, and welcome back to the Not Fintech Investment Advice podcast, where we very definitively do not give advice on fintech company investments. My name is Alex Johnson. I am joined, as always, by the brilliant Simon Taylor, author of Fintech Brain Food. Simon, thank you for coming back and not giving advice this week.
Yeah, I'm glad to be back and not give advice. It's probably one of my favorite pastimes. That and just like scrolling fintech Twitter, looking at the doom today. Pro tip, people, never commingle funds. Just putting that out there. Never, ever commingle operational and customer monies. Just don't do it.
No, do not do it. And even if you can sort of talk yourself into it being just one big ecosystem where money is fungible and it makes sense to keep all the money in one place, there's a very good reason we don't do that. It's also generally, and we're certainly not giving legal advice on this podcast, but if we were, one of the things we might theoretically say is stay off of Twitter as much as you possibly can. Maybe just destroy your phone and get cut off from the internet entirely, because probably you're not going to help yourself. If you don't have a detailed understanding of what we're vaguely referencing here, jump onto FinTech Twitter. Make sure you follow our friend Jason Mikula. He'll give you the latest on what's happening in the messy world of banking as a service. But Simon, we don't have to spend all of our time in the messy world of banking as a service. We can occasionally dip out of the drama and spend some time talking about companies that intrigue us. So as always with this podcast, we will be going through a couple of companies in or around the fintech space that are interesting to us and explain why they're interesting and have a quick discussion. And then as always, we will wrap up by manifesting a couple of ideas for things we'd like to see in the ecosystem. Simon, would you like me to go first, or would you like to go first?
I think I might have one. If you would do me the honor, sir, I'm going to talk about Frich, which, if you're not down with the kids, is effing rich. Are you Frich or not? As you can tell, I am well and truly down with the kids these days.
Are you 19, 17? I can't tell. You have such a youthful appearance. I've never been able to figure that out.
I just went gray early. That's all I'm going to say. So Frich helps younger consumers understand how they compare to peers anonymously via an app. So they can compare salaries, spending habits, rent payments. And then, I love this little piece, it asks users to submit their most uncomfortable questions anonymously, and they'll win $100 if it's chosen. So this is kind of interesting. It's like wealth benchmarking for the under 25s. It's a great twist on financial education. We know from studies that consumers don't want to be financially educated at all. But this is leaning into that, questions everyone would never ask in public, but they're doing it on their own terms. It's using data, and all of the data is user submitted and permissioned. So again, another why did nobody do this before? And the packaging is really good. Now, they aim to monetize over time through community, and they're going to help target ads and financial products to those users, right? So nerd wallet for the 21st century for a new generation of people, but with the Q&A and the social and the benchmarking, really interesting hook. What are your thoughts?
Yeah, no, I love these guys. I wrote about them in the newsletter a week or two ago, actually. I think it's really cool. I mean, I think they've cycled through a few different hooks trying to kind of find the right angle to attack essentially personal financial management for Gen Z, but I think they landed on the right one, right? To your point, there was a survey that I helped do a million years ago, consumer survey on what people want from banks that they're not getting. And the kind of core question that we asked in the survey was, what's critical to the future of your financial success? And we asked it in an open-ended way where we didn't give them a drop-down list of I want a better checking account, or I want, better rewards or whatever. We didn't give them the standard bank answers. We just let them riff on what that question meant to them. And the goal was to get them to talk about things that sort of sit outside of what banks and fintech companies solve for today, to think more broadly. And interestingly, one of the most popular answers across ages, by the way, not just Gen Z, but across ages, was I need help developing a healthier relationship between money and happiness. And when you dug into that answer and kind of got a little bit more detail on what they were talking about, one of the first things they brought up over and over again was, and you won't be surprised to hear this, social media. And what they said was they kind of described the Instagram effect, right? Which is everyone spotlights the very best parts of their lives on Instagram and doesn't share the other
The ugly
99%
bits.
of,
Yeah.
yeah, exactly.
And
Or
also,
just the
nobody wants to be
mundane
that like
bits or,
tragic person who's sharing the like "I will get better today" memes. So, like, I get it,
right,
you know.
right.
So but that creates this like pressure effect, which when you add it to a generation of people who are already feeling that sort of peer pressure,
Yeah.
then you add financials to that in a market that's not been great over the last few years for new jobs and whatever else. That's a hard place to be.
It absolutely is. And I think that so building like essentially the anonymous sort of anti-social network for money, I think is a really interesting way to kind of counter that and say, look, like, you know, I think it's enormously helpful for people to be able to see the things you're struggling with are the things that your peers are struggling with. And here's maybe where you specifically are a little better. Here's some places where you maybe are a little bit further behind. But in general, like, you're not miles behind your peers. And the sacrifices that you're making to not go on that vacation or to save a little bit more money or, you know, to say no to this offer that popped up when you were browsing around and shopping, like all of those things are actually good things that are putting you in sort of good company and you're making progress. The thing I'll be really curious to see with these guys is I think they have at times maybe are still kind of kicking around partnerships with like credit unions or banks or others as like a distribution channel. So
Yeah.
I'll be curious how much of this remains B2C versus B2B2C over time. I also think integrating like product recommendations is a really interesting piece to this because obviously that's a good way to make money when you have consumer attention. But as we've seen with, I think, like NerdWallet and Credit Karma and others, that lead aggregation model can kind of pull you off course from a mission perspective
Yep.
if you're not careful. And so I wonder if there's even a way to have like user generated product recommendations where it's like the community is the one making the
Huh.
recommendations. And if they recommend a product on their own, and that happens to be one of like the embedded partners you have, you can make the application process faster and instantaneous and then get paid for taking the friction away, but the recommendations come from the community. I don't know, there might be like a different model you could riff on there that would uphold the kind of core value
Without it
proposition they're
becoming
building.
fake Amazon reviews. Like, how do you do that?
How
Like,
do you
you
how
got to
do you
make
do
sure.
that?
I do think, like, generally, financial product recommendations have to, really display data and make sure they straddle that. We're not giving investment advice, like, sort
Right.
of,
Yeah, not
number
investment
one.
advice. That's right.
And
Yeah.
then we're on this show of all places. And then number
Yeah.
two, if consumers do it, like, what are they actually saying about this product and what were their incentives to say it in the first
Yep.
place? But
Yep.
I think there's something really interesting here that if they can get traction, I mean, the first thing is, can they get enough attention? Can they get enough people to use the thing?
Yes.
Conceptually, this is really, really interesting, but will it work? And then the second question is, okay, then what's going to be what drives the flywheel of monetization? Benchmarking as a moat, though, is really interesting. I was speaking to a founder of a fintech company that has a lot of data that they're able to anonymize, and they can say things to a financial institution like, here's how you benchmark versus your four biggest competitors on this KPI that you really care about and this metric, like attach rate of whatever. And that stuff is like, in a sales pitch, that is gold. That is absolutely gold. So people want this data because they want to know how to get better. And I think that whole idea of the Apple Watch for money is not wrong, but the complexity of getting that data and serving it to you in a private way is non-trivial.
Yeah, no, it really is. And I do like the fact that in addition to having people connect their data and share their data, they're also trying to get people to ask questions too, because I think that it is really important to have that community element bolted onto it, right? Like it can't just be a dashboard that you go in and check and then, oh, nothing really changed. Maybe I won't check back quite so frequently. Like the community part is what keeps the engagement high and then allows for more of those sort of opportunities to happen on platforms. So no, I totally agree. I'm glad you brought that one up. They're one of my kind of favorite little PFM wedges that I've seen recently. So that's a good one. Do you mind if I throw one at you?
Please, sir, throw it, but don't hurt me.
Okay, well, I mean, it's funny you say that because my son has started throwing balls at me, like just tennis balls or whatever. And I'm like, okay, there's a difference between dodgeball, like throw it at me and have me duck out of the way versus like wanting to play catch. So just tell me what game we're playing before we start. That would be my request. So, Simon, this is me throwing the ball gently to you so you can catch it.
Alrighty.
This one is called, and it's not a startup, so it's a little bit unusual. You'll notice a theme with my companies this week, but this one's called Constellation. And I had not heard of this company before, but apparently they already do quite a bit of work across different industries, big pharma, financial services, media and telecommunications. But what they do is they essentially have like workflow and governance software for marketing and advertising. So the idea is if you work in a highly regulated industry, as we do in financial services, they provide a system that allows for you to develop creative assets, ads, landing page copy, so on and so forth, and then be able to get that reviewed, approved, run through all of the required legal processes, and then federate it out across all of the channels and places that you want to use it, and do so in a governed way. So essentially, if anyone has worked in kind of lending, it's sort of the equivalent to like underwriting model governance or risk model governance, but for marketing assets.
Yeah, I guess UDAP's going to be a big piece of that. In the UK, we would consider it the Financial Promotions Act. Like anything where you are talking about a certain type of product to consumers might have regulation wrapped around it and legislation about how you're supposed to do that. And you could step outside the law by saying things like this X product will do Y for you and you will get incredibly rich because of thing. And like, actually, that is then investment advice. And we're trying to stay away from that whole thing. So you need your marketing to come correct.
Yes, exactly. Well, and I think the core sort of challenge that these guys are trying to solve for, and UDAP, and what was the UK equivalent to it? I'm not familiar with that one.
The Financial Promotions Act.
Financial Promotions Act. Those, I think, are coming up a lot more in fintech specifically, which is why I was sort of thinking of this problem in a fintech context. And I don't think Constellation has made too much inroads into fintech yet, although I think that would be an area they could definitely go and are probably interested in going, because this is just one of those areas where, you have to strike a balance between moving fast and being nimble and not stepping over one of those lines. And the problem, and this is why I think software that sort of solves for this is interesting across marketing, across risk management, across a bunch of different areas, is it's really hard to meld a compliance brain and like a creative brain together in real time, right? And so like
I've witnessed that on the inside of a financial institution, and let me tell you, it was painful.
Yeah.
And there was a data protection lawyer in the room. It was, let me tell you, it could have done with a few drinks. It really
Yeah. No, I mean, that's exactly right. And so I do think that this is such a ripe area for more investment in technology. And if you look at Constellation's website, they talk about data. And of course, they're talking about AI now. So like, I think there are ways to make this even better and more sophisticated. But this to me seems like an area that is still a little, I don't know, underbuilt from a software perspective. And a lot of these workflows are more like, hey, I drafted the copy and then I sent an email to so-and-so in compliance, and I'm still waiting to get a reply. Like a lot of it is not very driven by workflows. It doesn't have a lot of automated monitoring built into it. And to put it in a fintech context, and I'm trying not to wade too deeply into banking as a service in this episode, but if you add additional stakeholders outside of your walls or outside of your institution, this whole process just becomes that much more complex. So anyway, I thought they were sort of an interesting example.
No, I completely get it. So large financial institutions have software called GRC, or Group Risk and Compliance software, which is like the software that all of the other spreadsheets report up into, and they're supposed to govern all the governance software.
Right.
It's crazy how much work goes into governance in a large financial institution.
Yep.
Smaller ones would have usually a committee in a big old spreadsheet, and fintech would have various things that they've invented depending on when they were born and how mature they are. But to your point, we've had some failures in that space. And it's made harder by the fact that the alphabet zoo, the alphabet soup of the alphabet zoo, God, that would be fun.
Well, I mean, that's probably a kid's book. Yeah, right there. Yeah, for sure.
I want to go there.
Yeah.
I feel like the letter K would be some kind of monkey. Anyway, the alphabet soup of regulators, if I can get my metaphors right, FDIC disclosures, UDAP, and SEC trying to do investor protection. Whose jurisdiction is it, and whose rules am I breaking? And that's just at the federal level.
I was going to say now, states. Yeah, every single one has their own rules.
The state level, there's tripwires everywhere, but they're all invisible, and they're in 4 dimensions. It's a difficult challenge for somebody. There was a company called Tennis Finance that used generative AI for UDAP compliance, but what they did over the top of it was offer a fractional CCO. And I think that's an interesting model for early stage companies. Later stage, you are seeing people be data driven with a lot of this stuff, and you're seeing like the PDFs being inhaled by AI and recommendations and co-pilots start to emerge. So perhaps Constellation comes at it the other way and sort of says, hey, we've been doing this for a while. We're pretty big. We've done it in some areas. Don't go try and implement this in HubSpot or with, an Asana process or whatever it is that you're trying to do to try and get it done that you've hacked together internally. It was interesting speaking to Ahmad, the CEO of Mercury recently, and they were saying they built all of their internal risk and governance and ops dashboards themselves because they didn't like any of what was in the market. But actually, that becomes really, really key to being able to continue to operate as a function and see all your data in one place. So, my question would be, would a Constellation really be able to sell into fintech? Because the big ones have built themselves and the small ones might have a more interesting AI shiny thing to buy from. So I wonder about your thoughts there.
Yeah, no, I think that's a really good point. I think the challenge with fintech is always, to your point, the big ones got big because they figured out how to do it internally. The small ones don't really have the budget and do have a little bit of a chase the shiny AI, work with other startups kind of bug to them. So I think that's definitely true. I wonder if in a fintech context, the go-to-market is more through the bank partners and then kind of getting forced by the bank partners to be used for fintech companies. That might be more of the distribution strategy. You see that in other compliance products that are kind of going after fintech companies as they start with the banks and then kind of work their way to the fintech companies. And I think everything that's been happening in banking as a service, just as one area, would suggest that you really probably want the banks to be more actively involved in picking vendors, and they're going to flex their muscles a little bit more there. So maybe that's more the go-to-market side of it, but it's a really good point. And I also think the challenge with this stuff is, just to use a kind of the bank to fintech example, in a bank context, I think it's seen as it's better to have compliant marketing than it is to have marketing that drives the absolute best results. And I'm not insulting bank marketers here. I know they do their best, but the organizational priority is don't get us in trouble. And so, for example, if you have a marketing asset that someone in a different part of the company has built that's compliant, you might build software that allows other parts of the company to use that marketing because it's compliant, it's fast, you don't have to build the wheel. But for fintech companies, I think they view it as every at-bat from a marketing perspective is my chance to knock it out of the park and to write the perfect headline or come up with the perfect image or something that will drive incrementally better results. They're much more focused on
thinking about growth.
Yeah, it's
right?
growth.
So they're not thinking about downside protection.
No.
Whereas a bank, this is why you see bank adverts that are we have an app and you can do banking anywhere now. You can do it anywhere. You're on the go. You can do banking there now. You can log in. And
did you see that TikTok video? That was amazing. Yeah.
Wow. Yeah. I've only had that for a decade and a half. That's amazing.
I know. Yeah. So no, I mean, It is very different, and I think that that kind of cultural challenge will be one that they'll need to overcome. Simon, please give me your second company.
All right, I'm going to try and say this because it's a difficult word to say. I think it's called daloopa.
Okay.
So, stupid name aside, this is the equity analyst's AI analyst.
Oh,
So, the use case here is, let's say you've got a spreadsheet model for an industry as an equity analyst. And in that spreadsheet model, you every earnings season have to plug in the latest earnings
yeah.
from a PDF into your spreadsheet model to try and figure out, how did Adyen move against Worldline,
Yeah.
and how did Block move against PayPal, and all of that sort of stuff,
Yeah.
right? So this very simply plugs actual numbers into your existing Excel model, and it helps flag and identify new guidance. Are we saying guidance is up? Or are we saying guidance is down? And they can model an entire industry and update it with actuals in more or less real time as soon as they're released. So, a couple of things stood out about this. Number one, everywhere I look, I see something in financial markets crossed with AI, because there's so many PDFs and so much market data everywhere I look. And the other thing is, what I liked about this was it's giving a spreadsheet superpowers, just like how everybody has their own weird spreadsheet that does that idiosyncratic thing that idiosyncratic way.
Yeah.
I think everybody has their own AI prompt. Well, this is kind of nice. It's just dropping into the spreadsheet. So now, instead of having 50 tabs open and copying and pasting from PDFs, that schlep work is gone. But the obvious question is, all right, well, it's generative AI doing this. Do I know the real actuals are coming through? And one of the things daloopa is working on is, this is like quite a niche use case.
Yeah. Yeah.
So they have humans in the loop, and they're always monitoring the effectiveness of those data pulls and those actuals, and going back and RAG and retesting and effectiveness testing their models. So very bespoke, very niche use case. But I think one of these companies, whether it's these guys, whether it's Lucite, whether it's Finsta, whether it's however many of them there are,
Yeah.
could build some of them will get acquired by like a Bloomberg or market data companies. There's hundreds of those. There's just so many of them that are worth like a handful of billion that are just out there making money with a Wall Street bank. So as a downside, these companies could do okay. As an upside, though, like, what if somebody builds the next Bloomberg here?
Yeah.
Like, what if somebody builds the next London Stock Exchange Group and market data company?
Yeah.
There's Thomson Reuters is part of LSEG. So, Refinitiv. There's a lot here to like. What are your thoughts?
Yeah, no, it makes sense to me. I mean, the thing that's cool about generative AI, just in a general sense, is that it doesn't take too many resources to spin up a really cool niche use case, right? And I don't know how many employees these guys have, but like, this sounds like the type of startup where, you can do this with a very, very small team, niche use case. If you know sort of the parameters of the use case and the different edge cases that you need to solve for, you get 4 people in a room, and you can really start to crank on it. So I like the ability to sort of wrap around these large language models with these hyper specific use cases that you can do without having to go out and raise, $10 million to get started, right? Like, it's, in a lot of ways, it's the opposite of most of the startups we see in fintech, where the initial capital requirements are so high to get started that it just excludes a lot of folks. Like, generative AI is, come on in, play around, like, get a couple of your friends together for 6 months and see what you can put together. So I like the ability to attack these very niche use cases. This one, I think, is really interesting. We've talked about this on the show before, Simon, but like, spreadsheets are like the children of analysts, and they're very protective of them. They believe theirs is like special and unique and amazing. And so obviously you don't want to screw around with the spreadsheets at all. But if you can empower the spreadsheets, if you can make it easier to update the spreadsheets, if you can make parenting the child easier and more automated, then that's probably a good thing. I think the question I would have would be, to your point about, can they become the next Bloomberg or someone in this space sort of get to that next level? What is the value add on top of being able to remove a lot of that work? And this is something I think about with generative AI just generally is, okay, it can solve for a hyper-specific, usually very manual process that's just annoying. Great. Once it's doing that, what's the advantage you get by people using it to do that allows you to unlock the thing above it, right? And like just thinking out loud, but like a thing I would be curious to know would be, just as an example, and again, there might be a million reasons why this is a bad idea, but like if I have a spreadsheet that I'm using to track, the performance of stocks in the payment space, like you were describing, maybe there's one variable or number that all of my peers use and look at in a particular way in their spreadsheets that I just missed or forgot about or am not using. Could it flag the lowest common denominator mistake that I'm making that everyone else is doing and help me
Yes.
up level my model in that way, right? And like start to do going back to benchmarking, like benchmarking and comparisons, not to give away the secret sauce of people's models, but to like up level the bottom of them so everyone in the market gets better. I don't know.
Yeah.
Like you need some ladder that
You
you can
need a
build
value
for
add. I
additional.
get where you're going with
Yeah.
this. So two thoughts, as always. I don't know why my brain always does this. I'll try and separate them.
Do it in two.
The first thought is that the problem with benchmarking with that sort of thing is you are regressing to the mean.
Right.
So as an analyst, by saying, well, everybody else is doing this, then actually I've given away my alpha.
Right.
I don't always want to follow consensus in the market.
Right.
The whole point as an analyst is that the data is helping me form an opinion that's elsewhere.
Yep.
So, but underneath that, though, knowing that I'm away from that and that I am being contrarian is still probably a useful data.
Well, it's like, am I being contrarian because I meant to be, or am I being contrarian because I missed something obvious? Right.
Or I just happen to be
contrarian.
contrarian.
Yeah.
And so that was number one. Number two, there was a recent paper or speech by the acting comptroller of the currency, Mike Su, and remarks on the 2024 Conference of Artificial Intelligence.
Yeah.
And he had a really interesting mental model for the nature of how electronic trading evolved in the 70s. So the first thing electronic trading did was generate inputs. So computers would provide information for human traders to consider.
Yep.
Sounds familiar. Inputs is step number one. Step number two was co-pilots, where computers support and enable traders to do more and faster. So this is, to your point, like actually what decision am I going to take on the back of this?
Yeah.
What action should I take?
Yeah.
Here are the things you could do with this information. Actually, based on your hypothesis and your model is saying, go do this, go do this, go do this. And then the third step is agents that just go ahead and execute all of that for you. So the software is taking the inputs, it's then making a decision, and it's just executing the trade on your behalf, fully autonomous. So inputs, co-pilots, agents. And depending on where you are on the risk spectrum, you see people emerging that do any number of those. There's people already talking about agents.
Yep.
There's a lot of talk in the corporate world about co-pilots from Microsoft and others and GitHub. And, there are some spaces where co-pilots are acceptable. And for the most part, it's just inputs. And the inputs are the really clean ones that people understand. So, like there's that whole, where are you at in the risk spectrum? And are you ready for inputs, co-pilots, or agents? So this is very clearly an input use case.
Yeah, no, and that's a really good mental model. And it kind of speaks to, as you're saying, for different use cases with different levels of risk associated with them, where are you willing to jump from inputs to co-pilots to agents? And, quite frankly, I think in a financial services context, where are you from a compliance and a legal perspective allowed to jump from one to the next?
Yeah.
And I'm sure that was a big part of Comptroller Sue's remarks as well, as just like, how do we wrap regulation around the evolution of this stuff? Because it presses on all of those areas, whether we sort of want them to or think it's a good idea or not.
It's a really good paper. Highly recommend it if anybody hasn't seen it.
Okay. Well, it's on my reading list. I haven't gotten to it yet, but I did see that. I was bouncing around our bank nerd channels a little bit, so I will be sure to give it a read. Simon, I have one more for you, and this one, like I said before, I picked sort of slightly different companies, so I'm cheating a bit here, but it's a company called Block, and they were actually co-founded by the guy who founded Twitter before it became X. Are you familiar with Block?
Do they make houses or bricks or something? No. This is the one that's got like the music service and something in payments, right? And some weird crypto wallet thing.
Yeah. They kind of, they do little crypto, little music, payments on the side, some small business stuff. No, Joking, of course. We love Block. But the reason I wanted to talk about them, and Simon, I selfishly want to get your thoughts on this, is that in recent earnings calls and investor conferences, Jack Dorsey, who of course we were referencing before, made several comments, I think very directly aimed at addressing concerns from investors that the company is very focused on finally fully bringing together the Square ecosystem and the Cash App ecosystem and merging those two together. And this is interesting to me for a very specific reason, which is that if you go back into the history of Square and some of the things they tried to do prior to Cash App, they actually have tried to bring consumers and merchants together through their products before. There was a product a million years ago called Cardcase that enabled in-person kind of mobile transactions. And it still was the most seamless and beautiful commerce transaction I've ever participated in as a consumer. It was amazing, but they got rid of it. And the lesson they learned at the time back in, I think this was like 2014, it was like 10 years ago, but the lesson they took from that was you have to slowly nurture two different ecosystems without compromising them or bringing them together too early before it makes sense to bring the two sides together. So you have to play a much more slow, patient game before you do that and get to scale on both sides. So that was the philosophy. However, then there was a report from The Information that came out sometime last year, and it was reporting on tensions and challenges that exist at Block between the Square and Cash App product teams, and basically sort of illustrating why it's been much harder to bring those two teams together, which is interesting because I think the cost of them playing this slow, long game was that the Cash App and Square teams got pretty used to kind of doing things their own way and kind of building for their own audiences. And so now, culturally, it seems at Block, the challenge is, okay, we know you guys were kind of playing your own separate games, but now the end game is here and we have to combine these things together. I have thoughts on kind of what that should look like or could look like. But Simon, I just wanted to get your take on, like, it seems now's the time where they're bringing these things together. What are you looking for as you sort of think in your off hours about Block?
So the thing that's going through my head is issuers are from Venus and acquirers are from Mars. They are so different as cultures.
Yes.
They're so different a set of regulators, right? And I know, look, Cash App is an issuer to some extent, but really it's a wallet, right? So they're different. But I get that the incentives feel different. And to get anything to scale, you have to focus on that thing and execute on that thing autonomously for a decade and then figure out what you do with it later. Like, it's very, very hard to execute a grand plan from day one. You have to do something well that gives you permission to do the next thing well. And you get tech debt, you get cultural debt. It's really interesting to see scale fintech companies with tech and cultural debt. That's observation number one. But coming the other way, wallets are inevitable. Apple is in a really interesting spot as a wallet. So data from payments.com was saying that of the 12% of consumers who default to using a wallet for every transaction, no card, nothing, they default to it for every single transaction as much as possible. Half of those use Apple Wallet. 4%, so 4% of the 12, so what, like what's the math on that? Like 35, 40% still use PayPal or Venmo, which leaves Cash App in there, but it's not a big deal. And so there's a really interesting demographics from where you play and market share question for Cash App's ability to be used as a payment method outside of its merchant ecosystem. So I think wallets are inevitably the future, and Apple Wallet is really demonstrating this, and it's becoming a center of gravity. But what's hard with Cash App is I can't store all of my other wallets in there. I can't store my identity in there.
Right.
It's okay, it's got Afterpay, but it's owning everything. I think to be a wallet, you've got to abstract yourself up a level. So yes, Apple has Apple Cash, but it also has other cards in there, and it has the Apple Card, but everything else. You have to be that, like, yeah, of course we do it. We also do calendar apps, but you can use another calendar app. Like, it's an ecosystem. It's a walled garden, but it's an ecosystem. And it suits their needs, and they'll drive things their way, and they'll be as Apple as they want to be about it. But they're open enough to make the ecosystem continue to work. That's my challenge for Block is, can they do that on the Cash App side to create that double-sided flywheel? The reason I think the Fresno drop is such an important lesson from history.
Yeah.
And everything that happened with Visa off the back of the Bank Americard is the realization that you need an incentive mechanism to open these flywheels up, and that an actor in the middle could really only do that thing. You can't be issuer and acquirer and network unless that's all you are for your brand, like an Amex type of thing.
Right.
If you are going for the three-party model, go for it from the start and go nail it. But if you're trying to be a network, then you have to be open, which is the Apple Wallet. Feels to me like Cash App is not making enough of a leap into transactions to really be that three-party model to be an Amex. It might have brand permission with kind of the lower income populations to maybe have a bit of a wedge there, but what's its right to win? And I don't know that it's figured that out to pull those two together. The economic case of, well, if it's all honest transactions and we don't have to pay interchange, get that, but why, for who, and what's your right to win? I think that's my question.
Well, I think you nailed it, Simon. I'm glad I asked you about this because you put it in terms that I had not quite been thinking about so clearly. But to build on your point real quickly, it feels like the last, 5 years, the objective for the Cash App team and the objective for the Square team was take this sort of ecosystem that we've built and then build more specific on us products that fit within that ecosystem. So we're not a wallet. Now we're a wallet plus the card. And the card is how we make money. And, we want to get direct deposit. And so it's been about deepening and becoming more profitable within those two areas. But the challenge, to your point, is, and Square did the same thing, right? Square became a bank. They added all of these additional products that they themselves offer. And so they're a little less of an open ecosystem and more of a product-centric ecosystem where they want you using their products. And even Apple with Apple Card and some of the stuff they've been doing, they kind of went down that road. But I think to your point, the ability to merge these ecosystems together relies on the fact that you need to preference the user's goals and their preferences for what products they want to use over your own objectives. So not that you can't compete and offer your own product, but you can't preference it above all the other ones that the customer or the small business owner might want to be using. And if you do that, again, you can go towards that Amex kind of closed loop model, but it's always going to be smaller and less valuable. Whereas, there's definitely a world you could see where Cash App becomes, a wallet that allows many different providers to play in it. And, obviously some of the stuff that Block does around crypto and stuff, they've demonstrated in some parts of their business an openness to lots of different rails and lots of different products that can all be sort of coordinated through one wallet or one ecosystem, but they haven't fully committed to that. And that might sort of be hurting their ability to bring those two ecosystems together. I think that's a great observation.
The ideal client profile on both sides of the business is different as well. So low income consumer, get paid early, the instant payments, all of that, amazing. Glad somebody's doing it well. But the merchants they have are like that boutique coffee shop and that really cool little, it's a little bit more in the Amex spectrum, as I would read it. Maybe I'm completely wrong, but that's kind of my distant observation.
Yeah.
So if you were going to build Amex, you've got it on the merchant side, but not on the consumer side. And then on the consumer side, how are they activating? It's not necessarily with the merchants you've got. So you've got a disconnect there. Whereas Amex never had that. They always had the high-income consumer and the places they want to spend their money, and then they built an incentive loop that works for that user.
Yeah.
What's your incentive loop here? Because you've got a disconnect.
I think that's a really, really good observation. Simon, before I let you go, should we manifest a couple quick ideas?
Yeah, super quick one from me.
Go.
I want a de novo charter. I want a de novo charter in the United States. Can we just have them? My God, imagine the things that it would fix if we just tried to drag some of these companies through the coals of becoming a fully regulated and licensed financial institution. Let's do it. Now, flip side of that is there's a lot of companies doing a lot of interesting things that they probably would not be incentivized to do if they did have de novo charters, but they could continue to exist and continue to innovate. But we might actually see some de novo charters, some things that you see elsewhere in the world. You might see a Nubank type of play. You might see Clearbank in the UK is the dominant banking as a service player in the United Kingdom at the moment. And they are a clearing bank. They're alongside Barclays and NatWest. They have all of the same privileges. So that's what I want. That's all I want.
I love it. I could not agree more. It's my number one regulatory wish. And quite frankly, I wish for a whole spectrum of different options, right? We've talked obviously before about national money transmitter license. You want to just do payments and money transmission, boom, you're over here. If you want a national lending license to experiment with lending, great, boom, you're over here. If you want to go full de novo bank charter, which is still an option, we'll make that slightly less painful than it has become over the last decade. Right over here. If you want a even smaller banking charter that's the baby cousin of the large de novo charter, just to try innovative banking things, but at a super small scale, boom, we have that for you over here. Let's give people a menu of different options to experiment safely in a regulated way at a small scale. And then if you demonstrate that you can do it at a bigger scale, you can graduate up. I don't think this is too much to ask, Simon. I could rant and rant and rant about this, but I'll let that one go. Thank you for manifesting it. All right, can I give you mine real fast?
Yes.
Real quickly, mine is I would like a savings super app. And the reason I say that is that there have been a ton of really cool innovations over the last decade in savings on a product wedge perspective, right? So you have automated savings where they'll just scoop a little extra money out of your account. I loved Digit back in the day. Loved it. And we just scoop a little bit of money out. Obviously, we have different versions of that sweep or grab a little bit of money on your behalf and automate that process. We have, save now, pay later, which is kind of the flipping buy now, pay later on its head a little bit. We have tons of these different apps that were built to help you save for a down payment for something specific. So you can save for a down payment for a home and get rewards or additional money put into that savings account by providers that you might work with when you're ready to buy a home, right? So there's all of these different sort of wedge savings products. But the thing I realized is savings is a holistic user journey and behavior, right? And so I think one of the challenges that consumers have with savings is they think of savings as one large activity that they should be doing or a journey that they should be on, not all of these independent apps that they want to have on their phone. So I would like someone to aggregate together all of these great savings ideas and basically build a savings super app that helps me save money, that optimizes the savings I'm doing. So it'll maybe move some money between different accounts. It doesn't even need to be the one paying me yield. It's just putting a little bit of money over in this savings account. It's putting some over here. Oh, they found a really cool CD that I'm okay locking up a portion of my savings in for the next 12 months to get me this rate, but optimizes my savings. And then what I want is a journey of different options presented to me as my savings are passively building up. So instead of my savings just sitting there not doing anything, notify me when a merchant who I've shopped at before would be willing to give me a discount if I took a certain amount of my savings and when it got there, used it to buy this product. Or notify me when, hey, I want to do credit building and you have a secured card, but I don't have enough money set aside for the deposit for your secured card. Notify me when I get to that point and we'll just portion off a savings of that and we'll open up the secured card for you. Notify me when it's time to start thinking about chunking off a part of my savings to go into a down payment, which you're willing to help further add to because you're going to get the loan on the back end of that. Savings should be a journey that is fully aggregated together. So a savings super app, Simon, is what I want.
Do you know, Reddit has the waterfall of how you should save.
Yes.
It's entirely known and understood what your savings portfolio should look like, but it's disaggregated across a million different apps. So re-aggregate it for me, people. You know, in the age of the Apple Wallet, in the age of Apple Intelligence, and in the age of 1033, all of this could be built by Apple, but they're not going to build it for 25 years because they like to really take their time. And by which point, every Google Pixel owner will say, oh, I had that 5 years ago, because history is just getting a bit repetitive at the moment. But I want it, and I can't wait for it to happen. I am so with you, sir. By that point, we'll be way past it. We'll be pulling from the retirement fund, never mind saving for it.
I really appreciate you offering in the subtle critique of Google and Apple and your desire to be Android all the way. So well done there. I will say, Google got to the whole erase people in the background of your picture, a couple years ago before Apple even contemplated adding it. So I feel you,
And
man. I feel
100
you.
other features. Oh my goodness, you can change the colors of where apps are on your home screen, and you can move them around.
Who
Yes,
knew
I've been
people
able to
wanted
do that for nearly a decade and a half. But, that aside, there's something in the Apple Wallet plus AI
Totally agree.
that you feel, plus 1033, that I find really exciting.
I completely agree with that. Simon, as always, a delight to speak with you, sir. I feel smarter and more sophisticated walking away from this conversation. So I appreciate you, and let's do this again soon.
I would love to be back just so that I can receive compliments like that. You're a star, sir. I appreciate you.
All right. Thank you, sir.
Thank you.
Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.